before we get started, I'm going to give everybody a couple of minutes to get on. Does anybody have any properties like MLS sheets that you want me to input live and go over? If you want to pull one, we'll go over a few of them live while we're on this session. So you could flip over to that and print it up. Mike, you got anything there, Mr. Luzzy? I can't hear you. You're on mute.
You hear me, Rob?
I can, yep.
Okay. Hold on 1 second. It's funny because Sunday, Renee and I did an open house. We just got a new listing in East Boca. And, quite a few people came in, but one of the people that came in was a cash buyer. And he was talking about cash on cash return and all of this. So it was very interesting. But I emailed yesterday. I tried to input some numbers into that spreadsheet that you gave us, and I couldn't put it. It said just for view only. I couldn't put any information in.
So, Mike, do you want to get a personal tutor session here and share what you're doing with everybody? Because I want to walk you through it.
Yeah, I want to go through it because it's very interesting. So, it's definitely going to come in handy.
So you have your own listing, right? That we can put in, correct?
Yes.
So what I'm going to ask you to do is if you could share your screen, there should be a button there. Fred, can you make me the host?
You are.
And then are you allowing screen sharing?
It is allowing screen sharing, and then you are now the host.
So there's a button, a green arrow, Mike. If you push that green arrow to share the screen, and I'm going to walk you through how to do this. And you have it printed up, your property?
Yeah, I have it in front. I have the MLS number.
So do you have the sheet in front of you, or you have to just go toggle back and forth?
I have the sheet in front of me.
Okay, so open up the do the share screen. I'm going to show you exactly how to use this document. Because
I'm on my phone, I'm having a problem with my desktop with the video. So stop participant.
You want to
share? Go to share.
So you're on your phone, huh?
Yeah.
All right. You know what I'll do? I'm going to be your assistant then. All right. I'm going to share my screen. If you go to the email I sent you, right? You guys can all see this, right? This is the investor worksheet. You're going to click on this. And you're going to see this. I assume that you got this, Mike, and then it said you couldn't.
Yes, I got it. I have it in front of me.
So what you need to do is you're going to make a copy of it. And I'm going to call it Fuzzy Investment Analysis Worksheet. Okay. And when you copy it, you'll be able to edit it.
Okay, let me see if I can do that.
So that's the key thing that you missed on it.
Okay.
And I'm going to share it with you, Mike. And what's your email, Mike?
It's mluzzi, L-U-Z-Z-I, at remax.net.
All right. And you want me to share it with Renee too, so she has it?
Yeah, that's fine.
What's Renee's?
rluzzi at remax.net.
And then I'll see here under the shared, oops. Hey, how are you? When I come over here, I'll see that it was shared with the two of you, okay? That means that you are both editors. The property address?
Property address is 1511 Southwest First Avenue, the number 1, First Ave. It's Boca Raton, 33432.
MLS number?
MLS is RX-1085 6738.
Okay, and what kind of property is it? Single family,
Single
condo?
family. Single family.
The asking price,
950.
let's say somebody bought it with 20% down. Oops. $20 down, 190. What would closing costs be on something like that, Mike?
I would think closing costs would be, oh man. For the seller, you mean? Or for the seller, for the buyer?
Hold on.
You're looking at it
Wait,
from a buyer's perspective.
Yeah, can you hear me without an echo? I just changed it, put it on the screen.
Okay, I can hear you.
Okay, good. So closing costs for a buyer would be approximately what?
We would figure on a house like this, probably from between, I think about 18,000, something like that. 15 to 20,000, depending.
And does it need much work? Or is
Yeah, it does.
like,
It does.
how
It
much?
needs. I would think someone would go in there, probably they could put in 50 to 75,000.
And how long would it take to do that?
To do all the work, Rob, I would
3 months?
think yeah, 3 months is a
Okay. And what would, do we have any lenders on here? Not, I see one out here. Matt? What would a investment, single family investment rate be for a 950 purchase price in ballpark?
I would say it's about 0.75% higher than market. So if market rates are 6.5,
7.25?
7.25 is fair.
Okay, maintenance on something like that, you're probably gonna rent it and the tenant will be responsible for everything. Would you think that's right?
well, the
Mike?
association fee, Rob, it's an HOA, it's $275 a month.
Okay, how much are the taxes if you buy it as an
Taxes,
investment? What would it be?
taxes right now are 11,127, but that's going to jump.
So if somebody bought it, what would that go up to?
If somebody bought it at 950, the taxes would be probably about 17,000.
Okay, annual insurance, about 5,000, 4,000?
Oh, I would think
6,000?
more. I would say 6,000.
And something like this, what do you think the rent increases would be in this area? I just did mine at 5% or CPI, whichever is higher. Do you think you could put
Right.
that in a lease?
Yeah, I would think that would be logical, 5%.
And over time, what do you think something like this is going to appreciate? Not 1 year, but let's say over a 10-year period. Do you think it could do 3-5%?
Oh, I definitely, because it's East Boca and it's a huge house.
Pick a number. What would you?
I would
5%?
think, yeah, I think so.
Okay, and management for a property like this is probably going to be really low since it's a maintained property with an association, right? So it'd probably be
Right, and they also, the good thing is they do the lawn and the landscaping, so it's included in that 275.
okay. So I'm going to put 1% management fee. 'Cause this is very easy. What would this
Mhm.
rent for?
I think this property would probably rent for, I would say, 8,000 to 9,000 a month easily.
So that rented for $9,000 a month. Here's your details. Principal and interest 5815, taxes and insurance are 2,000, basically 2,000 a month. Maintenance fee 275. Property management, I put it as a very low 1%.
Mhm.
That doesn't seem right. Let me just double check the formula. Oh no, this is 3. This is 1. Total expenses. If we got 9,000, you'd cash flow at 1,534, 18,000 a year. You'd pay off about 11,000 in principal. Your annual profit would be 30,000. Cash on cash return would be almost 7%. Your annual rate of return would be 8.5% with 2% appreciation. It's 18%. And if it appreciated at 5, you're getting a rate of return of 30%.
Wow.
Pretty easy to do, right? And then 5-year profit is 132,000, and you have a 15% rate of return on your investment over 5 years. So if you put down your total acquisition cost here, Mike, is 265, and you would get half of that back in the first 5 years.
Very good.
What do you think? What do you think about this tool?
Excellent. Excellent.
Does anybody have any questions on it? I can't possibly be that good, I'm sure.
Yes, I have a question, Rob. Good morning. It's Lynn. You went ahead and changed the formula for the property management fee in cell 20. And somehow, I went ahead and changed it to 1%, but I think that I missed something because when I brought that down on my spreadsheet, the maintenance and association fee is
270, because what happened is there's a flaw in the setup here. I'm going to fix that right now. So that would be maintenance fee. So now if I make a copy of this. And I put in here maintenance fee 1%.
Yeah.
And I put rent 9,000. It should be $90 down here. So I fixed it. If you make a copy of the sheet again,
Okay.
it will be corrected now.
Okay.
Okay. So unfortunately, when we tinker around with it, it might have a couple of glitches, and we figure it out by putting them in. Does anybody have another property that you'd like us to
Hey,
take a
Rob,
look at?
before you move away, I have a question on that.
Yeah,
Can you hear me?
I can.
Okay, but I can also remove that maintenance fee. For instance, if it's a what property owner, just one home, and the owner's gonna do all the maintenance himself. So then the only factor I have to put in is the vacancy factor, and then whatever other expenses, but no maintenance. So I can remove that altogether, right?
Yeah, I mean, you can. That's a decision that you make with the client.
No, but I'm saying I can remove it from the formula and it will still work.
You can put a 0 there.
Or just put a 0. Okay, got it.
Yeah.
Okay, that's it.
Rob, it's Kelly.
Yep.
If you put a home warranty on the property for the appliances and everything else, that would be added into the maintenance fee?
So if you put a warranty on and it was $600 a year, you can put $50 a month. So you could
Perfect,
put
thank
a percentage there that would equal like half 0.5% of the rent, might be $50.
Thank you. That's great.
So does anybody else have anything that you want me to put in, or you want me to use one of my own?
I do have one, please, Rob, but I don't have the MLS offhand. Do you need that?
So you can tell me. Let me just put it on the same sheet we're working on here. Okay, so what's the property?
The address is 8277 Northwest 127th Lane in Parkland.
And what kind of property is it?
It's a condo.
Okay,
Asking
And-
price is, sorry,
go ahead.
the asking price is $549, but it's a little bit overpriced.
Okay, and Matt, what do you need to put down on a condo for an investment?
Investment property condos are considered
25?
singles, so you do 15,
You can do 15?
15% down.
We have PMI, right?
Yeah, yes.
If we do 20, no PMI?
Yep.
Okay, 20% down. Closing costs on that, Lisa, would be about what?
Oh, I'm not sure.
Anybody want to?
Maybe we should ask them more, the
Well, no,
title.
closing- So I'm going to say 10,000 for Colleen. Do you think that's reasonable or no?
Yeah, 10 is about right.
Does it need any improvements before you can rent it
No,
out?
no improvement needed. Only just a
Okay.
little bit of paint, touch up.
All right, so let's just say $1,000 to touch it up, right?
Yes.
We're gonna do on a 549 condo would be the same, Matt, like or is a condo get an upcharge,
I would say mid sevens, yeah.
like 7.5?
Yeah, do 7.5.
Or you could pay what, a point to get it down to like seven, what would it get to 7? 2 points?
It's about a 0.25% lower for each point, so 2 points.
So let's say 2 points on a 450 is $9,000. I'm gonna do this. I'm gonna do it 2 different ways here. 549, 20% down, and I'm gonna make it 19,000, 1,000. And I'm gonna have it at 7.5. And I'm gonna do this at 6.875 with 2 points. Association fee?
It's $604 a month.
Annual taxes?
Annual taxes on an investment, isn't it about 1.7%, right?
So $9,000.
Yes.
Annual insurance for there, because it's a condo, it's not gonna be
It's
that
about
much, right?
1,500 insurance.
And how much of a rent increase can you get in that community? Can you
So
count on
current,
5%?
currently you can get 39.50. That's the current rate.
And that's market rate?
Yes.
And do you think that over time, like if you did a lease, you think somebody would agree to a 5% increase over year?
Yes.
Okay. How much do you think that's gonna appreciate? I have a calculation with 2%, but do you think over 5 years we can see 5% comfortably?
Well, in the last 2 years, they've gone up 200,000. So yes, probably.
So let's just put in 5% and then we'll play with the number. And the management fee, I'm gonna put 1% since it's an association, there's very little to do, okay?
Exactly. Yes, correct.
So we put all these parameters in and it's gonna give us, says the annual profit on both of these is negative. The mortgage payment is 46 or 4,400. Our rent is 39.50.
Mhm.
So this would be a loser. For
Okay,
that
so at
price.
what price should my client buy it in order for it to be a gain? What
Okay.
about if they pay 500,000 for it? Can we just change that number?
Yep, that's what's beautiful about this. So you can use this on how to make an offer. At
Yes, to see.
500,000, the monthly cash flow for the first year is still about
Negative.
$300 negative, right?
Mhm.
But over 5 years, you're getting a 18% cash on cash return and a 43% return of your investment. So if somebody was agreeable to buying it with a $400 loss for the first year, the second year that would be erased, and then you would make 43% of your cash back in the first 5 years. So this person would get 51,000 back in 5 years, and they get a 18% cash on cash return over 5 years, which is what 4.5% per year. And then in year 6, you're going to have that same. You're probably going to have a 7% return plus the 5% appreciation, so it'll be like a 12% return. So I would think an investor might bite at this for 500.
Mhm.
Does anybody have some experience with investment properties? Want to comment on this?
Rob, I was wondering, the loss for the first year, wouldn't that be a tax write-off?
Would be, yeah.
So for an investor, that might even be a win,
Well, I mean, Colleen, I think,
depending, you know.
yeah, I mean, if you can find stuff that has a profit, I think an investor would rather have it positive income, be able to
Right away.
depreciate it, still show a little loss, and put cash in their pocket, which is one of the benefits of real estate.
Yeah.
But I don't think that this would be a horrible investment at 500. I think at 550 it would be a stretch.
Thank you.
Anybody
I'll
else?
try.
Now I want to just share with everybody here. Notice over here, I changed the closing costs to reflect 2 points, and I lowered the rate by 5/8. So it's a fair comparison because I'm making a financial decision on, do I want to pay a couple of points to provide a better financial return? And the problem with investments, and particularly condos, is you get a upcharge of 1/4 of a point, maybe even 3/8 for it being an investment. Then you get another 1/4 of a point upcharge for it being a condo by most lenders. So you can basically pay off those upcharges by paying a little bit up front. So I think if you're able to show somebody, yeah, if you don't, no points at 7.5, but you pay the fee for it to be an investment and to be a condo, you maybe get 6 7/8, maybe even a little bit less. It enhances the return a little bit. It gives us a
Bob.
negative 275 per month. It gives us a 10% annual return with appreciation and amortization, and look at this, a return with an appreciation rate of 5% is almost even. So it does all the math for you. Go ahead. Any
Hello?
questions?
Yeah, it's Christy. I have a question. I see you have an initial vacancy period, but you're assuming it's 100% occupied for the rest of the period for 5 years?
That's what I'm assuming, yes.
Okay, with a condo, I would have a problem with that because it takes 30 days to get them approved. So if somebody moves out,
Actually, in this particular instance, there's no association approval.
that's great.
So if you have an association that has like an approval period, you might want to increase the property management fee to accommodate for that. So maybe you take it from 1 to 5%, because you might have, it might turn over every 3 years and you have a month vacancy when it does.
But Rob, isn't it that in most renters, the average is 2 to 3 years? Lease versus 5 or plus?
Well, the 5 years is not saying that they're going to be in there for that long, Mickey. The 5 years is just looking at an extended outlook.
Right, no, I know, but I'm saying, we're not factoring in that, rent loss for vacancies. So the vacancy factor should be a little higher, no?
So I don't know. I have 4 rental units, and they've been there for, one is 2 years, another one is 2 years, another one's been in there for 6 years, and I do modest, I do 3 to 5% increases. So I find if you're kind of a good landlord, that maybe you get people in there for a little bit longer. But it's a fair comment.
Are your rental
I-
units single-family homes or multifamily homes?
So I have a mixed use property, I have a 2-family, and I have a single family in an association. Those are the 4 units I have.
Okay.
So I'm gonna pull up a commercial property. I printed it up. So I have a multifamily property in Bloomfield, New Jersey. Put this in. 132. And do you have a stopwatch on your phone?
Yes, I do.
All right, can you just start this up and see how long it takes me to do it? 132. You got to start it? Franklin. It's Bloomfield, Jersey. 3774288. It's a mixed use property. It's 8 units. The asking price is 299,500. 25% down. Closing costs, I'm going to say 30,000. Improvements. This is fully rented, so you wouldn't need to do anything. There'd be no initial vacancy. Mortgage rate on something like this might be 6.75 on a 5-year balloon. As a matter of fact, I'm going to do closing costs of 45,000 for bank fees. Maintenance and association, I'm going to do 500 a month. Annual taxes, 35,850. Annual insurance, 6,000. Annual rent increases, 5%. Additional appreciation rate, I'm going to be conservative, do 4. Property management, I'm going to do 3%. And the gross rents on this are 162,600. Divide that out. $13,500. How much time?
2 minutes and 24 seconds.
2 minutes and 24 seconds. And I stumbled on I put it in the wrong block in the beginning. So it's basically a 2-minute exercise. Somebody says, hey, Mickey Lippman, is this a good deal, this property in Bloomfield, right? And you come down the bottom here, you look at it and you're like, monthly cash flow is negative $5,000. Probably not a good deal, but what would what would one talk about if the numbers come up like this?
Price.
Right, so what else?
Well, you need to discuss about future rents and if they're market rents now or not. When you said 8 units, what's the breakdown of apartments and commercial stores?
So it's 4 and 4.
Now, I would have to take those units and see what the market rent is in that town. So like, if the apartments are cheaper, if the apartments are under market rent, do projected rents, and then as well as the same with the commercial. Because
So
it could
I'm
be a
looking
bad
at,
investment now or so, but it could be really good if they worked on it and getting the rents up, depending how far the market rents they are.
so,
Also, you got to worry about, if a property that size, the rent control rules in that town, the laws, you may not be able to bump the rents up like you think you can. So there's a lot that goes into it.
right, that's you, Rob Lippman, right?
Yeah.
So Rob, you hit the nail on the head. I'm gonna turn over the reins to you. You can finish up the course, but when I'm looking when I'm looking at the rents on this one here on the MLS sheet, it gives me the residential breakdown, and they're all 2-bedroom, 1 bath, right? And it looks like it's just probably a 5,000 square foot building with 5,000 square foot of apartment on top. Now, one is rented out for 17, one's 13, one's 1,850, and one's 1,300. Now, it could be the one for 1,850 is in much better condition. They're exactly the same square footage. Or it could be that, they just haven't raised the rent on the others. Could be that they're not allowed to raise the rent on the others, right?
Right.
But if you can bring them all up to 1,850, that would be 1,100 plus, that would be 1,250 additional rent per month. So if that were the case, right?
I'm sorry, were those a residential units or were those a commercial units?
Residential.
Okay.
So if it's in decent shape, a 2-bedroom, 1 bath in Bloomfield should be $1,700-1,800 minimum. Should not be $1,300. So that brings your monthly rent up to $14,800, and it takes your cash flow still negative, right? Over 5 years, with a 5% increase and no vacancy, you're going to get a 5% cash on cash return, because with the 5% increases, right, it's going to take a loss to a break even to a positive plus 5 to a positive plus 10, averaging at 5.41. Your cash on cash return, your 5-year cash return would be 43,000, and your 5-year profit would be 211,000 on a initial investment of $750,000. Still, I'm not loving it. Anybody feel the same way as me?
No, I agree with you, because anytime you do these papers, it shows like a 5 or 6% return. Knock it in half. Because I got to tell you, so many of the realtors that put these in, they're not like the Marcus and Millicheks and Gabble Hammers. They put all the expenses down. They put the bare minimum down, the insurance, the mortgage payment, blah, blah, blah. There's so many little things that happen that just cut that return in half. So like a 4 or 5% return on paper could be 0. Because there's never, it never covers everything. And also, when I look at these MLS listings from these agents, they list a lot of stuff wrong. So it's so important to talk to the agent. And half the time, they don't even know. They'll put tenant pays heat, and then they'll say 1 gas meter. It's just that things don't line up in these listings that the agents put. If you have the tenants are paying the heat, and there's more than 1 tenant, and there's 1 gas meter in the whole building that they put in the MLS listing, those two things don't coincide. So sometimes you really got to call the agent and dissect the thing. That's it.
So Rob, I'm gonna raise my hand, say I made a mistake. I looked quickly. The taxes on this are showing here for 21 at 20,946. I use the total operating expenses. So if I put the correct tax amount in, let's see what that does. It might be a break even. So your monthly cash flow year one is minus $2,900. And this property has been on the market for 281 days. So maybe the value of this is, what would you say, 20% less? I'm going to put 2.4. Okay, at 2.4 instead of 2.9, this property is basically at a break even. Okay, minus $64. If we increase actually, I think that's with the increased rent. So year one, it's at a break even. And the 5-year cash return on $700,000, $645,000. The 5-year cash return is $92,000, and the 5-year profit is $225,000, which is a 35% return in 5 years on your investment. You know, and then you also have the appreciation factor, which isn't, you know, built into the returns down here. So at 2.4, you might get somebody who's interested in this, right?
2.4% return.
No, at 2.4 million instead of 3 million. It's 299.
Oh.
Right, but I'm saying that this is really not a 2.9. This is not a 2,955 property. It's been on the market for 281 days. It hasn't sold, right?
Right. You know, I don't
Anybody have a listing of their own that you want me to run through and see if it might be a good investment?
I don't have a listing, but I do have a property I would like you to try out if you don't mind.
Sure.
Okay, it's a 2-family in Clifton.
Hey, Rob, one last thing before I'll interrupt my wife.
Yep.
You there? Just on
I'm here,
the 8 units, anything with the 3 or 4 units, you got to worry about the green card and expenses involved with the DCA and all that kind of stuff.
Agreed.
Anyway,
it's a little bit more. It's a more sophisticated buyer. Duly noted.
Yeah, because then you got like who's paying the heat in that building? Was each tenant have their own heater, or is the landlord supplying the heat for the whole place?
I mean, in the MLS sheet, it says garbage included. You know, you need to do more investigating from what.
Well, that's what I'm saying.
Said. Yep.
That's
so Mickey, let's go. I want to just give you a caveat before everybody gets overwhelmed by this. I think this is best used for like a duplex, 2-family, a condo, or a single family. And the target audience here is going to be people who weren't thinking about investing, in my opinion. Okay. And these single families and condos are the ones that are more often overlooked than a 2-family or a mixed use as far as competition to buy and complexity to run. So Mickey, what's the one that you have in Clifton?
Okay, so it's in Clifton. It's a 2-family. The MLS is 230-01053. List price is $485, but I was there over the weekend and the line was like 30 deep, so I don't think it will go for $485. I think it will probably go for $540, $550. So I would put $550 as the cost, the selling price.
Okay.
It's 2 units, 3 bedrooms. I want to say in Clifton, minimum $2,500 per month.
Does it need much improvements or no?
It says, I wasn't able to go inside. The line was too deep and I had another client. But it says that it needs some TLC. So I want to put in, but from the pictures, it doesn't look like much, but let's put 50K as a improvement. The guy that I'm thinking for about this is a contractor, so you could probably get this done much cheaper.
So if you put $50,000 into it, would you be able to get more than 25 a unit, or is that it?
20, I mean, it could maybe 27. It's Clifton, so I don't want to say too high.
Okay,
it's
so let's
not
say we
in
do
like-
6 closing costs.
And the
I'm gonna add-
taxes,
Good.
the taxes are 10.2.
Insurance and something like that would be what, 3,600?
About that.
I'm gonna put 2,500.
I think it would be more, but
Okay, you think it'd be more?
I would definitely say, based on where all insurances have been going up lately, including my own. So I would say 35 would probably be a good number, or 3,000 minimum.
Let's do 3, and then we can always refine it later. Annual rent increases in Clifton, you could probably get 4%, 5%, right?
I would say 3.
3%. What would you say the appreciation rate is going to be on a 2-family there over 5 years?
I would say 5 would probably be a good number.
And property management fee, 3%?
Well, he would do all the managing, so I don't know that you really need to put anything for management fee.
Okay. And we're gonna put 5,400 for rent. Now what I'm gonna do, Mickey, is I'm gonna copy this and I'm just gonna put it in the next column. And I'm gonna change the interest rate.
Okay.
All right, so I'm gonna increase the closing cost by 15. I'm gonna increase it by 10,000 to 25,000.
Okay.
And I'm gonna lower the rate to 6 7/8 because you're paying points. Okay. And
Where are we? Cash on cash.
here. Total 2222, $400,000 mortgage. All right, obviously fine. I obviously have a problem with my principal and interest payments here. Let me just 412.
But doesn't the same formula apply to all the cells? And why would the other ones have worked?
I don't know why it's wrong. Okay, so this one would have a monthly cash flow of 975 to 1100. Annual cash flow of 12 to almost 14. You'd be paying off about $6,000 in principal. You'd have a profit of 17 to 20,000. You'd have a 5 to 6% cash on cash return. Annual return rate would be 7 to 7.7, which is including the repayment of principal. With a 2% appreciation rate, it's getting you an annual return of 13%. And with a 5%, it's giving you an annual return of 21%. I can see why there was a line outside it. Does everybody understand this one? I know everybody doesn't. You're just being shy, right?
I'm looking at it on my phone. It's hard for me to scroll back and forth real fast on this.
Does anybody know why, if there's a 2% appreciation in year one, why the return rate goes from 7 to 14, or goes from 8 to 14?
No,
Why doesn't it go from 8 to 10? Who knows that?
don't know.
Anybody?
It's appreciation on the appreciation on the new value.
Nice try, but nope. So the reason is, do you get appreciation on your down payment, or do you get the appreciation on the whole house?
The whole house.
Whole house.
Right. So if you put 25% down, right, and it appreciates 1% a year, you're getting 4%. If it appreciates 5%, you're getting 20% on your down payment. Does that make sense? So if I want a house for 500,000, right, and I want everybody, if everybody can take out a piece of paper, I see, I'm watching you. Take out a piece of paper. You buy a house for 500,000. All right. You put down 20%. That's $100,000. If that house appreciates by 5%, how much is the appreciation? Say 500,000 goes up by 5%. What's the increase?
25,000.
25,000. And Rob, what's the down payment on a 500,000 with 20% down?
100,000.
Okay, so what's $25,000 return on a $25,000 return on 100? What's the percentage return?
25%.
Right. So the house goes up 5%, but because you're leveraged at 80%, you're getting the appreciation on the entirety. Everybody
No, I
understand?
understand what you're saying.
that?
Mm-hmm.
Yeah.
Right, because
Hey, let me ask you a
normally,
question.
sure.
In reference to appreciation, the only reason I'm bringing this up, it just seems like the last 2 years, the pandemic time and all that, things have appreciated so much. I'm scared to say it's going to appreciate too much next couple of years, because this shit's got to settle down sooner or later. I mean, I don't have anything to back that.
It feels like a bubble, right?
Yeah, not like it's going to, crash, but I just feel uncomfortable saying this could go 2 to 3% a year, because we've had these ridiculous increases the last 2 or 3 years.
Right, but if you had a 10-year horizon, do you feel like it would go minimum of 2% for 10 years?
I don't know if I can answer that. I really don't know. I'd be guessing if I answered that.
I definitely think so.
Well, of course you do.
my
You
thought
think the
is-
opposite of me all the time.
So Rob, and I think that the key here is you have to ask a client, right? And when I did the presentation in Florida last week, I said, who feels like the market in the next year to two might be softening or going down? I think a third of the people said, yeah, I really feel like it might drop. And I said, who in the next 5 years feel that the market's going to be lower than it is now? And there was one person with their hand halfway up, and we had about 25 people in the room. So this is something that you can't predict. But I think over a 5 or 10 year period, I think it's pretty universal that prices would go up. Nobody can guarantee that, Rob, and that has to be something that your client has to agree with. But if they're going to be
So wouldn't
investing in
you
it,
say that historically, a decade, every real estate always appreciates within a decade? Historically.
I mean, historically, like I don't see where there's a period where over 10 years that the property has been lower than it was, even if you were to pick, the peak to the trough, right? And if you really wanted to do that, there's the Federal Reserve website that you can use. But I think we're kind of going into the weeds here, right? If somebody's going to hold a property for 10 years, you can make an assumption it's between 2 and 5%, and it gives you the returns, 13 to 21%. You own the property. It's not like it's a piece of paper that could go to zero or, years ago, I thought, AT&T and Lucent being from New Jersey were pretty safe bets for people to put their retirement. But if you were all in on those stocks, you had to go back to work. If you're in on the tech stocks, Facebook, now Meta, and Google and Amazon, those have all had some pretty substantial corrections. I think real estate, if this is a 2-family house in Clifton, and I'm gonna play on the skeptic here. Rob, if you wanted to rebuild a 2-family in Clifton, you think the cost to rebuild it is going to be higher or lower in 5 years from now?
I'll be higher.
So if the cost to replicate it is higher, it's going to provide support for existing inventory, in my opinion. But like I said, I can't predict the future. So,
Hey, Rob.
Yes.
What about different markets? I mean, here in Florida, we've got such an influx of people coming to Florida every day. And I don't know, I can't see it stopping in the near future. I mean, it's just going to continue. So I think the Florida market on the whole, I think is in a really good position for properties to appreciate, especially people leaving the Northeast like they're doing. So I think we have a little bit of a different market down here, and I think it's a positive.
So I think migration trends are definitely going to be in the favor of, people moving to Florida. But it's interesting that, in New Jersey, you would think that we have a void, but we do have, people moving from, for example, Brooklyn to New Jersey because it's less expensive. So, that would be a good reason for somebody to expand from New Jersey to Florida in the real estate business. That would be a great idea. But,
very good idea.
Yes. So, if you have any referrals in the Boca area, there's this guy I know, handsome looking guy named Mike Luzzy that can take the referrals. Pretty smart too, No, but Mike, nobody can predict that future. I feel the same way as you do for obvious reasons. But I do think that if you tell somebody, I think it's going to appreciate 5%, you're going to get somebody saying, well, how do you know that, right? But if you say, look, Mike, if you're going to buy this for a 2-year investment, I'm not totally comfortable. But if you want this for a 5 to 10 year horizon, I feel pretty confident that the properties are going to appreciate. And over a 5 to 10 year period, you're going to have not only the cash flow from the property, the tax advantage, plus the appreciation. I think all those three things are, as realistic as can possibly be. Now, I'm going to go and I'm going to deep dive here on a tangent just for a moment. And I'm going to show you something which is here. This is a pretty cool thing. So this is the Case-Shiller index. Okay, if you wanted to go from 2008 or 2006 was the high, 183, right? And we take that out to 2016. So if you bought at the height and then you go exactly 10 years, you're a percent or two off. But I would argue that that's an epic price correction, and you would have had to have bought it exactly at the peak. We looked at a 10-year window. 2013, 143. 2016, 177. 177 minus 133 is 77 minus 133, 44 divided by 3, 44 divided by 3 is 15,000 a year of appreciation on a base of, so 2013 to 2016 saw about 10% annual appreciation. And I think that's more of a normal market, right?
Mm-hmm. Definitely.
Nobody thinks
Hey,
that
Rob,
housing.
do you have that for interest rates also? I would love to show clients what the historical rate is over time. Does that exist?
Hey, Rob,
Yes.
can I give you a way to talk around appreciation a little bit?
Look at that, Mickey. I have the secret
Love
weapon.
it. Where can I find that?
The secret weapon's called Google.
I know, but what?
All right.
What is the website?
Don't tell any of your clients, because then they won't use you anymore. But here it is.
What's the site, Fred? And I can't read it. It's too small of a font.
So I just Googled, Mickey, I just simply Googled historical 30-year mortgage rates, right? And I looked at the first one that wasn't an ad. I went to that and it gave me this pretty cool number, which I don't think you can want anything more than that, right?
Yep.
18% in 1981.
Awesome.
Wow.
That's when I bought my first house. That's what I use as an example for my clients that, in the 80s, it was in the double digits and how, it goes up and down, but typically, it does fluctuate, but I don't think it'll ever go back up to that. Hopefully not.
All
Hey,
right.
Rob.
So we have 1 minute left. I'm gonna put a teaser out and then I'm gonna go back to you, Rob. Okay.
Okay.
So next Tuesday at 10 o'clock, I'm going to try to keep this going as a pattern. I'm a little disappointed at 27 people, but next week we're going to have a special speaker, Lori Caruso, who, I have people that I come across in my career that do certain things exceptional. And Lori's somebody that moved from mainline Pennsylvania near Villanova to New Jersey because her significant other relocated here. She had a vibrant real estate business in mainline, moved to New Jersey, borrowed against her retirement account, and put on a aggressive, all-out marketing campaign to a very strategic farm area. And she studied the turnover rate of homes. She studied which homes had less issues with trading, with whether they were like newer or older, public utilities, private utilities. And just from today, I'm just going to look at the notes so I'm accurate. So she said that she made over $250,000 from her original farm, and she spends less than $4,000 a month marketing. So that's under 50,000, and she made over 250,000 in 2022 from that farm, and that's not outlier. That's the norm. And she participates in 55% of all sides of transactions, which means that if there were 40, let me see here. If there were 18 sales in there for last year, she participated in 21 transaction sides. So that means at least 3 of them were double-ended, or maybe 5 of them were double-ended, and only 1 or 2 transactions she did not have the buyer or the seller. So next week on Tuesday, I'm going to have a special guest, Lori Caruso from Morris County, New Jersey, who's going to talk to us candidly about, her strategy, how the consistency pays off, and how, a $50,000 investment is getting her 250 or more every year. So if you like those numbers, I would suggest marking your calendar for next Tuesday at 10 o'clock. Anybody interested in that?
Absolutely.
Sure.
Sounds fabulous. Rob, Scott's got a question.
Go ahead.
Jasper, what is
Go ahead.
Scott?
I can't hear the question. So, Rob Lippman, you were talking before when I cut you off for the promo. It looks like you left.
Yeah,
the
let
room.
me ask you a question. I always felt, and this is probably bad, but just say you buy a 2-family for $500,000, all right? And in 7 years, you sell it for a little more than you paid for it, so it didn't appreciate much. But if you're making some positive cash flow and somebody else is paying down your principal balance, it's still not a bad investment. I mean, yeah, we all want things to appreciate a lot, but if you're making positive cash flow, whatever that amount may be, and somebody's paying down your mortgage, what is it, 4 to 5% a year, it's not the worst thing in the world. And
Robert,
I always push that with people.
So Robert, let's compare that. And I agree that that's a possibility, right? So let's say that you bought a stock, right? Most stocks don't pay plentiful dividends, so your cash flow would be less, right? And if you make a marginal investment in the stock market, you can lose 20, 40%, correct?
Correct.
Quite easy to do that. And if you want proof, I can show you how I did it.
Me too.
All right.
I'm not a
We've got
stock
some
guy.
of them.
So if a bad investment is you make a small profit, you make money along the way, you get to depreciate it, and then when you sell it for what you paid for it, you probably can build in some sort of a capital loss, so you get a little bit of a tax benefit. I don't think that's a horrible outcome if that's the downside.
Right. That's what I always tell people. Worst case scenario, it's still a good investment.
But how about now while we're waiting for Scott, I just want to show somebody or show everybody, if you were to do this for a client, I wanted to let you know, I want your opinion. Would they think that you're average, or would they think that you're a pretty sophisticated real estate professional if you're providing them this, right? So I take this sheet here, and I'd like to have an easier way to do this, but for now, this is what we do. We highlight all the properties that we analyze like this. We go to print. Instead of current sheet, you do selected cells, and you can give somebody a customized analysis like this. I can change the spacing here. I can do this portrait. Fits on a 1 page. It's got our logo. I could put your logo up, your contact info up here. Now, how many agents do you think in your local market can deliver a sheet like this in 10 minutes?
I'll let you sit here.
Not many.
Hey, Rob, it's Scott. Can you hear me now?
Yep.
All right, perfect. I don't know what was going on with my computer. I wanted to ask a question for you, being your past mortgage broker experience and, of course, your excellent real estate experience now. The affordability factor for investments, Florida as an example. We had our prices go up about $200,000 in the last 24 months. We also had our taxes reflect that, which means that any house that was owned 2 years prior their example tax rate would be something like $3,000 or $4,000 a year. Now with the new purchase price, you're going to have almost double that. 3,000 to 4,000 is now going to be 7,000 to 8,000 minimum. The insurance factors have gone up, also double, especially with the storm last year, and there might be another surcharge coming. And mortgage rates coming down. I ran a couple of scenarios through your spreadsheet here, and I kept coming up with a negative cash flow with small amounts, but like upside down $50 to $100 a month. And I'm just kind of curious your long-term idea of what will happen with rent costs prior to this environment that we're in right now. The return on investment would be $300 to $400 a month based on what the purchase price, the interest rate, everything combined put together. And right now, everything kind of being at a peak, if somebody were to go in with their 20 or 25% at everything we've got now, it's really hard to be profitable. So with the long term, I'm curious what you think. I even put in like a 5% rate. And on some of the examples that I was putting together, it still came in with like almost a flat, no cash flow. Is this something you've thought about as far as what affordability factors are going to be going forward?
So if you look at properties, right, and you look at a condo or a 5-year-old property in a community where everything's maintained, right, versus buying a multifamily or a mixed use, where do you think there's less risk, Scott, on the spectrum of managing that property and reliability of income?
Less risk?
Yeah, do you think a mixed-use property with commercial tenants is riskier than a townhouse where everything is maintained and it's newer?
I mean, if everything is maintained and it's newer, that's your least risk.
Right. So you're going to get a lower return on that, right?
Yeah.
And you might even get a small negative cash flow when you're buying that in the first year. But if you're paying the principal down and you're also have the ability to refinance it at some point in the future, I mean, that's a conversation that is not completely ridiculous to have, right? If you bought
Absolutely.
a property.
I'm with you on, I believe the rates will go down. I think we'll see 5% before the end of the year as far as what excellent credit potential rate. I do think we'll get down to a 5% for the new normal. My question is more of the long-term affordability factor with the factor of what a mortgage would cost, a 25% down for your typical investor, not a cash flow perspective of if you paid all cash for the property, totally different segment. I'm talking your 25% down investor, the people who bought homes who then need to rent it. They're going to have to raise the rent cost to cover the overhead in a spot where we're already kind of at a high cost of living. And I'm just curious if you've given thought and what your perspective would be on long-term affordability when we know right now what we're looking at for our price point of what homes cost, what taxes, what insurance, the rates, and even, again, if we go down to a 5% rate, it's going to have to cause rent to go up almost another 15 or 20% long term, I think, to afford houses bought now at 25% down.
So you did a big brain dump there, Scott, and I think sometimes we overthink things, right? Like when I buy a security, right? Like I can sit there now, I can put my money in the bank, right? You're still going to get a very low return, right?
Mm-hmm.
Option 2 would be, to buy a bond. Now, if you buy a 5 or a 10-year bond and interest rates drop, or excuse me, if interest rates go up and you buy a bond, the value of the principal goes down. So there's risk beyond just the interest rate. You can buy securities or you can buy real estate, right? Those are basically the things that you can invest in. And if I was to look at the spectrum of what's the least risky or the less worser, I think buying real estate's the least worst opportunity for somebody to look at. It's not perfect, Scott. Like if you're looking for perfection, no, if you're looking for perfection, you know, this isn't the case. But I think if you were to go to somebody who's, you know, seeing the values go up, and you were to say, look, I don't think you're going to see values continue to go up where they are now. As a matter of fact, Scott, they might even soften in the next year or two. I don't know for certain. However, I feel pretty confident that over the next 5 years and 10 years, that prices will be higher. And you showed them that chart, right? And said, hey, with the exception of buying at the absolute worst time, 10 years later, you're 2% less. With the exception of that one ability to buy at the absolute worst time, in 10 years, real estate's always appreciating 3 to 8%, right? And you can take time shots. Say, so if we took a 5% appreciation over 5 years, that's the way we need to look at this investment. And I feel very, very comfortable, even if the real estate market gets challenged. I don't see material and labor costs coming down. Do you?
No, not too much more.
So if the cost to provide new inventory is going to be higher, do you think that's going to provide a floor for the existing real estate? Because somebody's going to look at a new construction and say, boy, that, you know, I paid $500 for this townhouse, right? The new one's costing $650. I'll still pay $550, $575 for one that's 6 years older, right? So these would be the conversations I'd have.
I just want to make sure I wasn't being negative on real estate for an investment. I'm actually very positive of that. My question, and I didn't mean it to come across Debbie Downer style, was in the affordability factor long term, as far as rental prices to compensate for with what we have mixed in right now. And I know I put a lot of factors in, but absolutely I'd hedge real estate against the stock market for safety and security and return on the investment. That was not my question. It was more of the profitability factor and to raise the rents and what your thought process was there. You know, we talked about a 2 to 3% increase in rent on all these examples that you gave.
Well, Scott,
I actually factored in a little bit higher one, right? Last week's Zoom was recorded. It's on abundance in real estate. I'll make sure it's there. And next week I'll show you how to get to it. And this one will be uploaded. So it's not, Scott, it's not perfect, but can I just tell you one thing that I would really encourage everybody to do? And this is not me being, you know, not me being overreaching, but what about motivating yourself to make 4 extra sales and then take those commissions and buy a house, right? And then you can say, you know what? I understand where you're at, but you know what? I just bought 2 the past year. So I'm not only a promoter, but I'm a investor, right? And if I found a good deal, this is the perspective I would have if I was in your shoes. I come across a good deal, I would call all my clients, say, this is a great deal. If they buy it, you get a commission, you have no risk, right? If nobody wants to buy it, then you can come in and buy it. Like, this is like heads you win, tails you win, right? You find a good investment. I introduce it to my client, they buy it, I get a commission and a happy client. If I talk to all my clients, nobody's ready to pull the trigger, I buy it. And then when I do my next round of calls, say, you know what, I just bought one myself because I really believe in where the market is. I could share with you what mine looks like. And I found 3 similar ones. I see you, Chrissy, in the corner of my eye. What do you think of that? Having that dialogue where you're not just a promoter, but you're a participant in the market.
Well, I 100% agree with that.
So, Chrissy, if you go on the bottom left, you can unmute yourself.
There we go.
You look like look like you're in paradise, by the way. I want to go there.
This is Delray Beach.
Yes.
Yes, I think it's great. And, I'm looking. I'm looking to do it myself and provide.
What's a bigger motivation than to have, you know, maybe you have a vision board and you put 2 properties a year or 1 property a year. everybody can make 4 extra sales and have a down payment on one property by doing this concept.
I'm living my vision board that I did 10 years ago. Okay, I'm absolutely living it. And I spoke with one person last week about it, my banker, and she was like, yes, I want to buy an investment property.
So I'm also going to, on these Tuesday sessions, I'm going to do a session, maybe it'll be 2 weeks from today, on credit. Everybody's like, oh, well, that's not too exciting. But I've been studying and also utilizing credit to good credit to be able to have funds to make investments. And if you can keep your credit clean, there are multiple avenues where you can get credit cards that will give you 12 to 18 months with no interest, and it won't appear on your credit report. Because we're all independent contractors. So, you know, I have some crazy things. Like I have a Korean Air business credit card that was mailed to me that doesn't appear on my credit report, and it's interest free for 18 months, and it gives me points. So I'm like, oh yeah, Korean Air. I might never fly there, but I have a $40,000 interest free loan. And they don't require any, most of them don't require any financials. They just look at your credit history. So I'm gonna share that with you as a little bit of a boost as we start to invest, and also as a reserve in case something happens. If that makes any sense.
What kind of credit rating do you need to have something like that?
Probably 720 minimum, maybe
Oh,
740.
that's fair.
So I hope that that this has been helpful. Nothing is perfect about it, right? But this is you know, this is something that we need to have conversations with. And you know, to Scott's point, I don't know if you're still on, Scott, but if you have this conversation with 10 people, you know, there might be 3 to 5 that might have a hesitation or a reservation about it because of the aforementioned reasons that you talked about, right? But do you think it's reasonable that 2 or 3 people out of 10 might have a serious interest in this opportunity? Scott?
Oh, absolutely. And again, I wasn't trying to be a Debbie Downer, because I believe that right now is a good time and a better time than sometimes in the past, especially for buyers who need a home. And there are investment opportunities to be profitable. My question was more long-term affordability, profitability, you know, for what the rental segment's going to look like. And it's just, I am overthinking it. I'm just trying to, you know, think the process with what it is now.
So Scott, in the past 12 months, you know, have you had more cash deals than you normally had in your business career?
Last year, absolutely. Yes.
How about you, Chrissy?
Have I had more investors? I'm sorry.
No. Have you had more people paying cash to buy houses in the past 12 to 18 months than normal?
Oh, yes, absolutely.
Mike, have you had more cash buyers than the norm?
Yes, definitely.
So
Oh,
I
where
want to
all
be
these
ahead.
cars coming from? I didn't have any. I think I had one last year.
All right.
Because
So it might be law averages there, Ron, but I've probably seen the cash buyers be anywhere from 3 to 7 times what we normally see here as we track it, which is massive. Okay. And I have a belief that there's a lot of liquidity and cash on the sidelines, and that these people are waiting for somebody to share a message that's not a sales pitch. Like, if you care about your clients, they want to be educated on what's possible and not live their life from ignorance. Do you agree with that?
Yes.
I mean, Mike, do you feel like you're selling timeshares if you have this conversation, or do you feel like you're adding value?
No, you know what? I think when you let your clients know what's really happening out there, and you could give them opportunities, I think they trust you. And if you're going to do it yourself and you say you would do it yourself, I think that puts more credibility into it. So you're educating your clients is what you're doing. And that's what I think that's what they're looking to you for. So
And
that's
Mike, I'm
part
gonna
of our
put you,
job, not just to sell them a
I'm gonna put-
property.
I'm going to put you on the spot, Mike. Are you open to buying investment properties?
Sure.
I mean, that's the ultimate evidence that we believe in it. So, look at my sheet might have a glitch or two in it. It's not perfect. The investment world is not perfect. It's a conversation starter. And I really believe that the sooner we get into real estate, ourselves, the better off we're going to be set for, future sustainable, passive income. And if we believe in what we're talking about, then we ought to take action and do it. And if we don't have the savings to do it, we have the perfect business to invest, because the more people we help buy investment properties, at the end of the day, we're going to have an abundance of cash that we can use to buy our own.
Right.
Okay. So next week, if you mark your calendar, I'm going to share with everybody on Friday's mastermind a little bit about next Tuesday's session. It's going to be, it's amazing what this girl does, and we all should take notes. And just like, buying investment property, there's really no shortcut. You have to learn a little bit about it. You have to have the communication skills. You have to reach out to people. And I think if you realize that you're helping people, this job becomes a lot easier, and it's not a burden to make these conversations. So I appreciate the 22 to 28 people that shared this time here. I hope I added value. And if I did, tell your coworkers that they missed out.
Hey, Rob, will
would
you
you-
share
Yeah.
today's spreadsheet with the current examples that you used as soon as possible? Is that possible?
I can put the spreadsheet in the chat if you want to download it while we're here. I can put it up with I'll put it in the chat, and I'll also put it up on the YouTube link to this training. Okay. So if you want to hang on a second,
And the last
put it in the
question for
chat.
you, Rob. Last question, if I may. Why do you think we still have such a shortage in inventory?
I think because people with low rates are stuck to where they are, right? And people sentiment in the marketplace, I don't think is positive. I think we had a pivot where everybody was talking about you'd go to a PTA meeting, you'd go to a soccer game, you go to a football game, everybody's talking about investing in real estate and how much their house went up on Zillow, right? Now I think the conversation has shifted. So that's my opinion. I'm not an authority on that, but that's my opinion.
Rob,
So
would you send me information about Tuesday's meeting? I'd like to really promote it. I think it's fabulous that you're
Yes.
doing that. Thank you.
So can you see in the chat, like for me, it went weird, but can you see the link to the spreadsheet in the chat?
Yes.
So if you want that, can you copy it and open it? And it would be a view only. You can make a copy of it. You can play around and edit it as much as you want. All right. So my last request behind Colleen's comment is, if you could find somebody in your office and tell them that they missed out, I think that would help us add more value to our organization. And when we live in the abundant planet, it doesn't matter, the more the merrier that are recognizing us as the real estate leaders with the highest integrity.
Rob,
Hey,
I
Rob.
just tried to download the link, but it's asking me for access. You'll get an email. No, let's see.
All right, let me
Yes, me too.
share. Oh, I got it. Can you try now, Ron?
Now it works.
So whoever wants it, if you want to download it while we're still on here, that would be
Wait, did you
ideal.
put it in the chat again? Because I only see the old one. I don't see a new one.
Okay, I got it.
I think the link.
If
is
you
gonna be
click the
same.
link again in the chat, it works.
Got it.
Yeah,
Got
Oh,
it.
same link. Okay.
All right, so I thank everybody for investing in themselves, and hopefully this was helpful.
Awesome, Rob. Thank you so much.
Thanks,
Okay,
Rob.
great.
One more-
Yep. Just
Rob,
one
works.
more
Thank you,
question.
Rob.
Next Tuesday, Lori Caruso on farming. You might think it's a lame topic, but it's awesome. And then I'm projecting the following week will be on aggregating some credit to make some investments yourself. Okay.
Hey, Rob, real quick, did you provide this as a blank where we can use it ourselves? I didn't attend last week's session. So did you provide it so that we can plug in our own numbers?
So if you go to the email, the bomb that went out, there was a link to the spreadsheet. I'll show that to you. And nobody get freaked out. I have a lot of tabs open on my computer. So in the bomb email right here that you got, if you click here, you can download the investor workshop.
Perfect.
And then you're going to have to make a copy of it like this so that you can use it because it's going to be restricted, the one that you open.
Got it. Thank you so much.
Okay. You got it. Let's share the opportunity with our sphere and past clients. And I'll see you all hopefully on Friday.